We try to be agile on the ratings. We did cut it to sell just ahead of the Q2 earnings. I thought that some of the estimates were a little bit inflated. But honestly, we almost could have used our prior price target and kept that target even moving to a buy. However, we do think that there's underappreciated long-term pricing power at Netflix for a variety of reasons, and that's really layering something nice that's fundamental onto the upgrade just on account of the
so
price
that pricing
reduction.
power more than counteracts two things that seem to me to be pretty important. Number one is their high spend on content, and it is only expanding. And number two is their slowing growth in the United States. But you think they can raise prices and that way pull themselves up?
Well, guidance for member growth for Q4 is very strong, both domestically and overseas. So that's still a vital, building block. So we certainly feel good about that. We certainly cited the free cash flow burn, but you have to put that in the context of the company's market cap, $140 billion or so. And they're very confident that they're getting a good ROI on that investment return, given the member growth and getting more traction and some newer markets overseas in particular.
What are the biggest risks to Netflix growth as these content wars heat up? And content is certainly not cheap. We've talked about this several times already in this segment.
Well, I really don't think it's going to be a winner-takes-all proposition. I think Netflix is the best position. They certainly have the best technology stack as well as a lot of appealing content and, frankly, better ability to monetize the same content as anyone else. But when I look at someone like Disney coming in, I think that's a very differentiated service. It's not going to be as many hours of programming. It's going to have some very high-profile, Disney and Marvel, properties. So I think that's more of a complement rather than a displacement, for Netflix. That being said, I don't think the average household wants, 5 over-the-top services. So I think there are going to be a few select winners, Netflix and probably Disney among them. But there's certainly going to be some crowding out as well.
Sure, if you cut the cord, you probably don't want to keep buying for subscription. You want to pick one or maybe a couple. Thank you, Matthew Harrigan with Buckingham Research. Price target of $406.